10 finance rules everyone must know in their journey to financial freedom. 6th and 8 is my personal favorite. Watch till the end. Calculating the number of years in which your money doubles is very easy with the rule of 72. Take the number 72 and divide it by the rate of return of the investment product. The result is the number of years it will take for your money to double. If you invest $1,000 with a 6% rate of return, your money will become double in 12 years. The rule of 114 tells you how many years it will take to triple your money. Divide the number 114 by the rate of return of the investment product to determine the number of years it will take for your investment to triple. If you invest $1,000 with a 6% interest rate, it will become triple in 19 years. The rule of 144 helps you calculate how many years it will take for your money to grow 4 times. Divide 144 by the interest rate of the product to determine the number of years it will take for your money to quadruple. If you invest $1,000 with a 6% interest rate, it will become 4 times in 24 years. The rule of 70 is excellent rule helps determine what your current wealth will be valued at 10 or 20 years down the line. Divide 70 by current inflation rate to calculate number of years it will take for your wealth to be worth half of what it is today. If the current inflation rate is 5%, your wealth will be worth half in 14 years. The 10,5,3 rule helps you determine the average rate of return on your investment. According to this rule, one should expect 10% returns from equity, 5% returns from debt, 3% returns from bank. It is a good practice to keep 6 months to 1 year expenses as an emergency fund. Include expenses for food, utility, rent, AMIs instead of keeping it idle in savings bank account. Invest in liquid funds that provide higher return. The 100-age rule is a great way to determine one's asset allocation. Subtract your age from 100 to determine the percentage you should invest in equities. The rest should be invested in debt. 10% for retirement rule. Start saving for retirement from your first salary, no matter how little the amount is. Ideally, save 10% of your current salary and increase it by another 10% every year. By following this rule, you can create a significant retirement corpus. The 4% withdrawal rule ensures a steady income stream during retirement. Withdraw 4% of your retirement corpus every year, adjusting for inflation. This rule helps your retirement fund last longer. To determine if you can be called wealthy, multiply your age by your gross income and divide it by 15. If your net worth is equal to or greater than the result, you can be considered wealthy. Remember, these finance rules are based on practical experiences and should not be considered absolute truths. Like, share and subscribe if you have learned something new today. Let's learn, earn, and grow together towards financial freedom.